And as always, we're going to be looking for accurate context, good risk management, and always extra.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. It is Wednesday, January the 18th. I'm John Hoagland. Thanks for trusting me with your time. As always, a little buffering going on here with the program, but I think we're in good shape now. Today and every day, we focus on finding accurate context, thinking about good risk management, and remaining patient in our trading. If you have been active in the markets all this morning, hopefully things are going your way. We've got a long list of economic numbers today, starting this morning at 7:30 Central with the PPI final and the retail sales. PPI final, all of them came out lower than expected. Not going to go through all the numbers in a finite way. It's just all how investors and traders are going to digest these numbers. Retail sales numbers came out for December. All of those lower than expected. The core retail sales, I think, is the biggest one. It was expected to be down 0.4%. It came out down 1.1%. A pretty substantial drop in retail sales for December. The holiday season did not bring in, apparently, any good retail sales. So what that means to the Fed, what that means to investors and traders is, of course, yet to be known. I got Lacey here moosing me to get pet, so I'm going to pet her here. We still have a number of talking Feds and economic numbers to deal with today. At 8 o'clock this morning, Fed member Bostic is speaking. 8:15, industrial production. 8:30, Fed member Bullard is going to be speaking. 9 o'clock, we've got business inventories and the housing market index. And at 1 p.m. today, the Beige Book, which means it's 2 weeks to the next Fed meeting. No EIA petroleum status report today because of the holiday on Monday. That's going to be tomorrow after, I believe, the natural gas numbers come out. So stocks this morning still looking relatively optimistic prior to today's early numbers and the numbers and talking Feds that are coming out. Facing a long list of them today, investors will also be eyeing Microsoft, which is expected to announce some job cuts today. Earnings this morning, we had a couple of them already out. Charles Schwab missing in both categories. Prologis beats in both. PNC with mixed and JB Hunt missing on both. We have Kinder Morgan, Discover, First Horizon, National, Alcoa, all of those after the close today. So we are really kind of on the front edge of earnings season. We'll be paying attention to those throughout the season for you. Crude prices have hit a 6-week high as the International Energy Agency is forecasting a deficit this year as China's demand is expected to increase. The early forecast of the EIA petroleum status report again tomorrow is a loss of 1.7 million barrels. And if you remember, last week we had a surprise boost in inventories. So, and it's anybody's guess as to what's going to happen with crude oil and those inventories. Always makes things interesting for you crude traders, doesn't it? We have the make Hoag money today, but more important than that, we have our session with Jared Tendler today. That's going to be at 3:15. So I'm going to pass today, I think, on the reflection. I know that that's not a huge tragedy because we're going to be preparing for the session with Jared Tendler. I'm seeking the link to put into the chat here. So if you're not registered, you can go ahead and register for that. Hold on a second. I just messed that up. Hang on. Let me get this straight. There we go. There is the link, so you can register for our session with Jared Tendler. That's again today at 3:15, just after the markets, and we'll look forward to seeing you there. The VIX this morning is slightly lower at 1915. The fear factor is dropping in these markets. The dollar index, the DEC, is down at 101.98. The dollar continues its move to the downside, and the yield on the 10-year slightly lower this morning. Last I checked at 3.43%. As always, I do ask that you hit the lucky like button if you like what you're seeing. Let me know if you do like what you're seeing. Tell everybody. If you don't, tell me. I'm always open for constructive criticism and feedback and ideas. jhoagland@topstep.com. You can email me directly. And share, comment, question, feedback, heckling, love, all of that is welcome here on the market forecast and, on the market prep and the market reflection. Subscribe to our YouTube channel. You can get notification when we do go live, and looking forward to an interesting trading day today. Got to say good morning to everybody as usual. Good morning, Stephen Carlson, first in the room, winning the prize this morning. Joel MB, Les Frick. Joel's got a good thing here. I'm giving up eating chocolate for a month. Sorry, bad punctuation. I'm giving up eating chocolate for a month. I think I said that at the beginning of the month about whiskey. Only kidding. Good morning, Les. Good morning, Shaw. Good morning. Mortimer Short played out well yesterday. Send him his $1. Yeah, I'll send him his $1, but I will probably give it to him in the form of beer or something like that. Although I do think, if I'm not wrong, he probably would have been stopped out before the move started to the downside. I could be wrong about that. Terry King, good morning. Jules, Zach, good morning. Serenity Trader, good morning. Backer Sultan, Bill Phillips, Octoraps, good to see you this morning. Rusty Golfer, my spirit animal. Rooster, I'll say, son. Vince, good morning. Orion, haven't seen you in a while. Good to see you, Orion. I feel like I haven't seen you in a while. Sarah Hall, as always, prayers and love to you as well. Anissa, DA, SR, good morning. Khalid, Tanya Armitage, good morning. JM, good morning. Great Dane, good morning. Just signed up for the 100K account. Look forward to trade with you and the rest of the gang. Whoop, whoop. Welcome to the program. We're looking forward to your success. Let us know anything we can do to help. Anthony Bell, White House Cap. Don Clemens, good to be 80 degrees in South Florida today. I wish I was in South Florida today. What is it? It's 35 and mostly cloudy here in Chicago area. JT Irby, good morning. Dan Trader, Caprice 101, good morning. Good morning, Top Step. Rob T, Caesar, JT, Dr. VJ, JD, good to see you this morning, my good friend. Frank S, yeah, he said a 35 stop, so he probably would have gotten stopped out, but that's all right. I'll buy him a beer anyway. George, good morning. Lacey is currently warming my feet. Will, Sarah Hall, oh, yeah, of course, right. It goes right to the stop and then it breaks, right? Alfred, good morning. All right, let's do something here. We have something new and fancy for us. We're going to see how this plays out. We're going to jump into the charts here. I think that's all I've got to say. We are doing Make Hogue Money today at 2 o'clock. I'm looking forward to seeing you there. Perhaps I should put that link in as well for the Zoom meeting for Make Hogue Money, and then we'll get down to the charts. Anthony, on the threshold of getting funded today. Nice jobs. Just start today from zero, dance with the one you brung, keep doing what you were doing. Joe, what was the logic behind the short yesterday? We had, I think, just taken out the overnight high from Sunday night and failed to continue. I think that was part of it. But Randolph, my brother, was pretty much bearish all day yesterday. And hopefully he had a really good day. I don't see him in the room here today, but maybe he's going to stop in later and see us. Is it just me, or does anything above 4,000 on the ES seem heavy? It is acting that way. We're going to see that in the charts right now. Good morning, David. Let's see what we've got. Starting, of course, with the daily in the S&Ps. We've got a new little feature here for during the charts. You're not going to get away from me that easily. We're going to see me down in the little corner here. Hey, how you doing, everybody? Nice to see you. All right, you're going to see my glasses now because I have to be able to read what I wrote, which is a challenge sometimes all on its own. So, the S&Ps, doesn't it seem like the market has gotten heavy above 4,000? We've fallen into a little bit of a range here. The market state is still to the upside, but it seems to be struggling. We've been saying that for two days, maybe 3 days. It seems the market is struggling to continue to the upside. It's going to need new business. Now, the open interest that came out this morning had us adding 16,000 contracts of open interest yesterday and Monday. So it's a little bit skewed because that's 2 days. But what was the volume on Monday? It was very, very small. There was really nothing there. Let me double check something here. Yeah, that's Tuesday is going to include Monday. So we just have very little volume on Monday. So we did add 16,000 contracts yesterday in the S&Ps. Are those shorts? Sure feels that way. If those are shorts, and we haven't been able to break, we may end up getting some traders too short, and maybe we'll finally find some acceptance above last week's high. This market is seeking new business to move to the upside, and that new business can be stirred into action by shorts covering, again, back above that last week's high. Take a look at the continuous chart. We've been kind of checking this out here for a couple of days. We have our trend line that comes off the all-time high, hits here, close here, hits here. We have a little bit of a market aberration. This was a CPI number, so I'm really not kind of looking at that. I'm looking at that as excess, of course, but I'm not really looking at that as a kind of a chart point. We are wrestling with that trend line. Now, that trend line goes all the way again back to the all-time high. All the way back up here. That is January of 2022. So we've been in a downside market state ever since. Something else to notice here. Look at how close the 200 session and the 50 session moving average are. They are very close. We're getting pretty close to a crossover of those. If we maintain price up here, that would be what I would call the opposite of a death cross, which we had here. Maybe that's going to tell us something. I know my 401k would be happy about that. Take a look at the 30 now. Good morning, Michael. All right, so we got a knee jerk off the session yesterday. Off the numbers so far this morning. We're still looking for some numbers. The equities are still kind of holding higher. We're above value. We're inside range. We're right at last week's high. Resistant, 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 resistant. Are we finally going to use up the sellers up there and turn some traders into buyers up there? That really is the question. We seem to be holding above that long time trend line off that continuation chart. The 50 session is moving higher, another couple of days up here, and we're going to cross that 50 over that 200 session. Might be an interesting situation that we've got going on here. But what we're looking at today, overnight inventory to the long side, above value, inside range. Got to try and stay a little bit patient. We do have some more information and a bunch of talking Feds today. So, it seems to be probably all about numbers today, all about the talking Feds today. We're largely range bound over the last 3 sessions. Low end of that range is the overnight low. The higher end of that range is the overnight high, yesterday's high. And in the middle of it there, we've got kind of a pivotal level because it has been resistant with last week's high. Take a look at the TPO chart now. B-shaped, indicating long liquidation, a move lower, if you could call it that. We added open interest over the last couple of sessions. Value overall has been moving higher. Did we add longs or did we liquidate some shorts? Maybe we did a little bit of both. But here we are in range, above value. It's a normal variation trading day with a B-shaped long liquidation kind of feel to it. The initial balance high is the extreme high for the regular trading hour session. We did manage to take out the Sunday. We did manage to take out the Sunday high, overnight high, right here. Markets don't like that when there's a recent or all-time high or low that happens in the overnight. It usually isn't too long before the market takes it out in regular trading hours. So I'm going to try and stay patient today, as usual. The TPO chart here, this is yesterday's. It did create a rather prominent point of control. There's a lot of facilitation of trade happening here. If it's used it up, as it looks like it continued that facilitation yesterday or in the overnight, the market will go seeking new levels to facilitate trade. I'm going to be focusing on the highs here and the lows here for longer time frame, longer term, bigger opportunities. Be patient. Be patient today. Here's the crude oil. We are now in March. If you notice, we've got the H up here. You should be trading March. The volume has usurped the February contract. I've adjusted all my levels. There is a 30 tick, approximately a 30 tick premium in March to the February contract. So we've moved everything up about 30 ticks. Of course, there's nothing finite in futures trading. So we are now trading the March. There is potential for a market state change, a longer term market state change. Take a look at this continuation chart. Look at the 100 session moving average there. Okay, we are working with that today. We've got the 100 session moving average coming in at 82.09. We're trading right around there. Our high is just above that. Keep that in mind. This is an important level. Back to the daily chart. We are now finally accepting through time and through, maybe some volume above the weekly kickoff high, which is adjusted for the March contract to 81 bucks. The one thing that disturbs me about continuation to the upside on this 30-minute chart, and you'll see this on the TPO chart as well, there's a whole lot of weak structure down below. By weak structure, I'm talking about naked points of control, unfinished gaps, naked point of control, naked point of control. I believe we did close this gap to the tick yesterday. We are holding at the upper line of what we were kind of looking at as a potential bear flag. Well, now that we're above that weekly kickoff level, things are looking a little bit differently. If we can't hold that, it would make sense technically for this market to come down and recheck all these weak levels down here, this weak structure down here. But again, if we hold above 81, I think there's plenty of room for upside continuation. Take a look at the TPO chart here. So we added 19,000 contracts yesterday with value moving higher, but price throughout the day moving lower. When I look at this normal variation trading day, it's kind of a double distribution day. It doesn't look very confident to the downside, does it? There's a lot of holes. There's some anomalies that were rechecked yesterday. It doesn't act or look very confident to the upside. So that is another nuance that says I'm going to really be, kind of cautiously looking for opportunities to buy weakness above $81. If we accept back down below $81, I think that's going to turn me a little bit bearish for the time being so we can clean up some of this mess that we've left. Here's that little gap. Here's all the naked points of control before we continue to the upside. Now, we are going to be waiting for the API after the close today and the EIA tomorrow. The IEA did a bit of a warning today, and that's got us looking to the upside. We did open with a gap. We have closed the gap. The gap close seems to be right now supportive. If it can't hold the low here, and we start to show acceptance inside the range, and especially inside value from yesterday, then I'll start to look for this market to look back to the downside. With great expectations of higher pricing comes long inventory. Long inventory. If everybody's already long, it's kind of a buy the rumor, sell the fact type of situation. We've closed the gap. The gap seems to be supportive for the time being, but again, if we start to show acceptance inside yesterday's not confident move higher as far as value is concerned, watch the price action, watch for acceptance. If we find acceptance inside range and especially inside value from yesterday, look to the downside. The initial balance was the extreme high yesterday. All of these markets had at least one extreme of the daily session range at one extreme of the initial balance. We seem to be going back to that. Here is the NASDAQ daily, similar but different. Look at how the market has not necessarily fallen into balance here. It is still one-time framing higher. By one-time framing higher, I'm talking about higher lows consistently on the daily basis, higher highs consistently on the daily basis. This market didn't fall into balance. This market is continuing this push to the upside. Now, we do have these whole moving averages that are above price, but it would appear right now that this market is primed to continue this move to the upside. We added 6,100 on an up day yesterday. Volume wasn't fantastic, although in New York it was better than it was, I think, in futures. This market has been outperforming the ES to the upside. Everybody's saying, boy, it seems heavy above 4,000 in the ES. It's a little bit of a different story here. This market has a lot further to recover as far as the long time frame is concerned. We are not near that trend line here in the NASDAQ. And again, this was an aberration. I've got the high. We've got this contact. We're not there yet. So this market does have more room to go to the upside to catch up maybe to the S&Ps technically. Take a look at the 30 now. Overnight inventory is long. We got a knee-jerk both directions when the 730 numbers came out. This market is recovering nicely. I'm not sure if this is actually here or not, so I'm going to try and take that off after this. Is there a gap up there or not? So maybe somebody can look while we're in here. So Overnight inventories to the long side. It appears we're going to be opening with a gap in the NASDAQ. Are we going to do that in the S&Ps? Right now, the probability is no. The probability in the NASDAQ is, are we going to open with a gap? Yes, we're already there, right? So that's a higher probability. Are we going to accept above last week's high? Well, we closed above it yesterday. We haven't done that in the S&Ps. We've barely been able to hold price above that level. The NASDAQ is performing better. Take a look at the TPO chart. Now, this includes the overnight. This is yesterday. What did we do in the NASDAQ yesterday? We did something we rarely do. We had a normal trading day. In other words, the initial balance, the first hour of trade, is both sides the extreme of the regular trading hour session. The initial balance was never extended at all. This market became very range-bound, very central as far as the points of control are concerned. This market used a lot of facilitation yesterday, last night, continuing that facilitation. Is it worn out, this spot here? It's a very prominent point of control. It's a very even bell curve. I'm looking for this market to move away from this area today, and it seems to already be. We're trading above. We have to see how this day plays out, of course, and we still have some important information due out as the day goes on. So things can change. Anything can happen. ACH, that's one of our acronyms here. But if we do open with a gap and can't close the gap, there's only one thing left to do, and that's to look for opportunities to buy weakness. Gold. There's gold in them there hills. We've got a bull flag breakout underway here. We're still struggling with last week's high, however. We've got 2 weeks to the rollover, so I'm still kind of depending on the open interest and the volume that we've been that we're always thinking about and always watching. We had some low volume yesterday. Wasn't all that great, but we lost 3,500 in open interest. Okay, that is what I'm looking for in a bull flag. I'm looking for a move in the opposite direction that slows volume and lowers open interest. That's exactly what we're looking for in a bull flag. Take a look at the 30-minute chart here. Here's the bull flag. Small ranges, low volume, reducing open interest. It's exactly what I would be looking for in a bull flag. And unfortunately, we broke out above it last night at about 2:30 in the morning during the London session. It complicates things for us a little bit. We're going to have to buy higher if we think the market's going to go higher. We opened with a gap. We haven't been able to close the gap. We're up against last week's high, which was rejected on Sunday. Recent all-time high is usually not going to last for long. I'll bet it doesn't last for long today. But it complicates our opportunities and makes it more risky to try and get into trades today. Be careful. Be careful. Here's the TPO chart. So, what could have been a late spike yesterday ends up being excess. We did close above that, so that becomes excess. We had a double distribution trend day, not very confident. We've got an anomaly down here that would be a little bit alarming. But, you know, we've got, well, I guess we did not necessarily have a gap. We did close the gap at 7:30. But we are still holding above it, so I'm looking for opportunities to buy weakness if I can find it, if I can get it. You know, maybe the move back to this trend line, which basically that's what the market did at 7:30, was traded to this trend line. I'm going to put this on here so it's a little bit more visual. That would have been a pretty sweet spot. Didn't even get there. What doesn't happen can be equally as important as what does. Yesterday, the initial balance high was the high of the regular trading hour range. We went 6 for 6 on those today, ladies and gentlemen. On to, well, we didn't look at the euro yet. What am I? I'm getting in a hurry here. So, similar situation, but a little bit different here for the euro. We have Open interest on a down day yesterday, increasing on low volume. It's quite possible we've trapped some new shorts down there. What we need to do is see the dollar continue to move lower, and we need acceptance above last week's high. Looks like we're just popping up above that just right now. I love that when a plan comes together. Is this a bear flag? Here's the 30. Not necessarily. It's more of an expanding triangle. We've got even highs and we've got lower lows. We are right now breaking out above those even highs. If we find continuation, if we bring in the four tables of the auction process, volume, open interest, participation, price action, all of those things, we can see this market easily get to weekly kickoff high, which is 109.60. Well, coffee's off. Interested to see how this plays out. Another recent high that occurred Sunday night just got taken out. Take a look at the TPO chart. A weak high yesterday and a weak high up against Friday's high. Even highs like this just don't tend to hold. Some people call it a double top, but when they break, they break. Yesterday we had a double distribution trend day to the downside. The upper extreme of the range is the high of the initial balance. So again, another one. Finding support at this area of excess in the profile here. Looking to see if we can continue this move up above last week's high. And now we get to the 10-year. Again, similar situation here. We're breaking out above last week's high as we speak. Bear flag. We broke out of it early. We didn't get to participate in regular trading hours, but now we're looking at a possible continuation of the upside move above last week's high. Volume was pretty low yesterday. We did add 1,600 in open interest, so I think we've probably trapped some weaker shorts down there. Take a look at the 30. Here's our bull flag. Broke out last night about 10 o'clock, 8 o'clock, and ranged, and now we see the market continuing to push to the upside, taking out last week's high. Where is a good target for this? How about weekly kickoff high? Fascinating, these markets. Take a quick look at the natural gas, my little pet project here. Structure to the downside remains. Balance low tested or being tested. We're testing last week's low at this time. We lost 5,200 in open interest yesterday. Did we put in a little bit of a bear flag here? Certainly what it looks like. We got a little bear flag here. We got a little bear flag here. We got a little bear flag here. The market seems to be struggling to the downside. However, a little bit. Take a look at the 30. Whoops. So there's our breakout below our most recent bear flag. Struggling with last week's low. The market seems to be struggling to the downside a little bit. I could see a consolidation here for a little bit of a longer period of time or a deeper pullback to the upside before continuing in a particular direction. Here's the TPO chart. Yesterday, high of the session, high of the initial balance. All 7 of these markets had at least one extreme at the high or the low of the initial balance yesterday. It happens a lot. Normal variation day, a little toothy, not all that confident to the downside. And then, of course, we break out. We've got a gap. We can't close that gap. We're looking for continuation to the downside. But be cautious, be patient, be creative. There's going to be things that are going to happen that are going to be contrary to what you think. If you watched the coach's playbook yesterday, you were able to kind of think about and some of the things that we've dealt with as far as, having a bias, looking at that bias, discounting information that's contrary to that bias, and then, having that cost us. So Trade from a place of being centered, where you're open and available to all the information, not just the information that agrees with your position. Be contrary. Question everything, not only in trading, but in the world, right? We got to question everything. So, looking forward to a good trading day today for everybody. Hopefully, it's going to be. Again, I will miss you for the market reflection at the end of the day today, but we will have some time to spend together with Jared Tendler at 3:15. Also, we are going to have the opportunity to see how the market closes today with Make Hogue Money, see if we can't keep the streak going. And I will look forward to seeing you there. Take a deep breath. Stay humble, grateful, and creative. Trade from a centered position. Keep your knowledgeable trader in the front of your mind, and have a good trading day today. Those of you like Anthony that are close to getting to the funded account, it's just a trading day. It's just a trading day. Do what you do. That voodoo that you do so well. Get out there and profit today. Trade well. We'll see you soon.